Hi and welcome to today's presentation where we have the pleasure to present ReMatch. We are joined by you, Nikolaj Magne, CEO of the company, to help us through today, to answer questions. Today's event focuses a little bit on the historical report, your full year report that you sent out in the early this month. But I think more like to take an update, on your plan. You are planning to go private. You have made an offer, so people have gotten the chance to tag along. So I think it's more interesting to actually hear the current development and your viewpoint on the situation right now. So I know we will also cover that. As always, you can ask questions in the box down below this presentation. Do it in Danish. I will try to translate to the best of my ability, but the presentation will be held in English. But for now, I will hand the call over to you, Nikolaj.
Thank you very much, Michael. Well, thank you everyone for joining. And as Michael said,
Nikolaj, just can you press the start presentation?
So that's also an important button to use, right?
Also an important button. Else, just tell me. I will change the slides.
All right, here we go. Our factory in Holland. Highlights, as Michael said, from last year and a bit into this year is what I'll start with. So hopefully you can see the slides now. And
we can.
Good. Right. So in what happened in high level in 2022, we, as you probably remember, we ordered the factory in the beginning of the year for the Dutch market. We were operational in December 2022, which was our plan. So that was great. And the first 3 months of production have been successfully rolling over. Actually, more getting into 4 months now. Volume, quality-wise, we've been extremely pleased with what we've seen. So it's very positive, and we have great expectations for that factory now based on this. Also in 2022, we had, if you look at the actual revenue, the cash revenue that the group generated, we had a record year of more than 50 million across the group, based on the Danish factory, of course, collecting pitches and selling materials, the Dutch factory collecting materials, and the French joint venture collecting materials. Another part of our target for 2022 was to sign new commercial agreements, or at least improve our commercial strategy on what we call the back-end products. So that is the product sand, rubber, and fiber coming out of the production. We made a framework agreement at the end of last year where we, for instance, have developed a product for the acoustic panels industry, soundproofing, where we basically virtually integrate, if you like. So we expand our product into a new product that we get produced and sell it, which results in much, much higher sales and profitability for the group as such. So that's something we will continue to do on all the factories we are going to build. In December, we also ordered the French factory. We had that financed and ordered it, so it will be in Q1 of next year, maybe into Q2. We will hopefully see an operational sign there, but the actual construction just started last month. Also, we hired, of course, more people in the course of 2022, which is also is visible on the accounts. We spend a lot of cost of ramping up the Dutch market and the Dutch facility with people to run it without having the turnover of having an actual machine running. So we had 17 more employees. In terms of other markets, we also were able in the middle of last year to secure a site in Pennsylvania, which we are leasing or subletting out until we are ready to build. Which is great. So we have a secured position there. And one of the challenges we had last year, we had a number of challenges. One of them was that we partially shut down the production in Herning due to the high energy cost in August, September, October, November, etc. And we focused on doing maintenance and some upgrades that we wanted to do for a while. So we shut it down, and we actually announced this morning that we are running again in Herning, which is the good news. So we have done a lot of maintenance and some upgrades on the machinery and expect Herning to be producing better quality and higher throughput as a consequence. But overall, it's fair to say that 2022 and not 2023, as it says on the slides here. I don't know why. I'm probably a year ahead of myself, but in 2022 we had higher cost as a consequence of building the Dutch market, as a consequence of the general cost increases with energy, steel, all these things. So we also anticipated that in the IPO, that 2022 was going to be probably, or it was going to be the worst year from an operational perspective, as we only have one factory operational. And then in the beginning of, or the first quarter of 2023, we then announced the transaction that Michael alluded to just before, which was the investment by Verdane and Nordic Capital, Nordic Alpha Partners, to invest up to 235 million Danish kroner in the company and delist it from the stock exchange. And here it's important to say, I'll get into that a bit later also, but it is a rare opportunity for minority investors to participate in a delisting of a company into a private space. That was the highlights of the year. Now I'll go into a bit more details on the accounts as such. I'll go into them on a high level, but overall we have what we call IFRS revenue, where we only recognize the revenue that we have actually produced. So that means if we take in a pitch and we get money for it, but don't produce it this year, the revenue is close to zero on that pitch, versus the cash revenue where we actually get the revenue in hand. So this has obviously been impacted by the partial shutdown in Herning as the only factory. So on the front end, the temporary shutdown has decreased the revenue. In addition, we actually had some test runs we did in August and September due to the high energy prices. We did some tests and leading to an overall throughput rate of the factory. The revenue is down by 4% year on year based on that. Back end, we also had a lower back end sales in 2022 versus 21, and that's mainly because of the transport prices across Northern Europe, especially going into the UK market where we sold a lot of materials into before, and that generated quite high revenue and bottom line. Whereas now, with Brexit and with the high transport prices, that was no longer possible in 2022 from a profitability perspective. Apart from that, overall revenue, adjusted revenue, I said that before, it increased from about 43 to 51 million. And other key figures, I can mention the CO2 that reduced. The CO2 saving is reduced, of course, because we produce less materials. That was the main thing. I guess, of course, also the full-time employee went up. I said that on the first slide as well, as we ramp up in Holland. On the consolidated P&L perspective, the loss is slightly lower. And the bottom line, that's typically what people look at, but we have to adjust for certain things. And you will see that 2022 is a worse year than 2021, even though it doesn't look that from a face value. But if we look at the underlying reasons for it, high energy prices, I said that before. We also have some additional cost for ramping up Holland, about 8 million kroner for the staff alone in 2022 that we didn't have in 21. Also the travel, the IT infrastructure, utilities in Holland has amounted to almost 5 million. And some storage sites, mainly in Holland, but also in Denmark and the US, which was about 2 million higher than in 2021. Some of these, or these will not be the same going forward. Of course, that's why we highlight these. Staff will remain in Tiel in Holland, of course, but it will also generate revenues. Apart from that, we have about 10 million of non-recurring costs relating mainly to financing. And that's really the main issue there. And then we have some different appreciations in 2022 compared to 2021. On the significant cost of 2021, we went that through a year ago. That was mainly IPO related cost and a couple of other costs, which we could say was non-recurring, and hence the reason, if you compare them like for like, that 2022 is on a adjusted level, which I don't have on the slide, but just so you know, is worse than 2021. We also had to restate our tax losses in the balance sheet in 2022. So on the balance sheet, there will be an impact as well. And that's the main sort of highlights on the accounts. Feel free to ask questions. I think that is the summary of what happened. I think most of the things are as we expected. Of course, not the energy prices and increased cost and inflation, all this, but the rest of it is more or less as we anticipated in the IPO. If we then move on into the rollout and what's going to happen next, and what has happened in terms of the rollout and what's going to happen, as Michael said in the beginning, on the right-hand side here, you see the actual machine in Holland. It may not look very big here. I tell you, it is very big once you see a person stand next to it. But basically, if we go through the factories, Herning, the shutdown, we did discuss already. Maintenance and renovations been carried out. Higher throughput rate and reliability in 2023 is what we hope for and which we expect. In Teal, I won't bore you with all the details here, but I think what is significant is, of course, we start recycling in December, but also in February was great because we achieved the new volume that we expect to achieve in June or July. We achieved that per hour already in February, so way ahead of schedule. And we also already sent recycled materials to customers. So both on the production and the sales sides, we're very pleased in Teal. And I think we more or less discussed the French and the US side already. So
one question there, Nikolaj. Yeah. Can you fully reproduce the blueprints of the Teal factory in France? You know, with all the exceptions. There might and the reason why I'm asking it, there might be parts that not is available that you change or something like that. But is it the one you have ordered in France? Is that exact duplicate of the Dutch?
Is it 100% like for like? No, it is not 100% like for like. We already ordered it. We already redesigned it. You find small things once you design it and actually build it in Holland that could be done a bit better. So some of the piping has changed, but the main thing that's changed is actually very good news. But we have a project with the EU Commission where we're trying to, and we've done it on lab scale and we're doing industrial scale now, is taking a fiber from the grass and reproducing a new one. And through that, we've gone through a very sophisticated solvent procedure to get the polyethylene and polypropylene away from each other. But in that process, we also looked at other techniques. And one of the things we found is a new way of separating the fibers in the final step in this tower. And that actually cleans the fiber to I would say, a much higher degree now. So we can actually use them as a potentially, still on trial basis, but we know it's much cleaner. And potentially we can use it for the core fiber, so the inside basically in new artificial turf. And that is a process that's slightly cheaper to run. So we are getting a better product out in Teal, so in Erstein than Teal, at less cost. So there is a change already. You can say that wasn't part of the plan, but it's an upside. So I think that's something we want to do.
Perfect.
But it's a very good question. Otherwise, I wouldn't say it's bolt for bolt and etc., but it's very, very, very similar. If we then go a bit further in the outlook, the next outlook, what's going to bring in 2023, I think what we're all looking at is the ramp up of Teal. Now we can see the machine can actually perform as it should. How can we reach full capacity? And the real issue is we need people to work 24/7. So it comes down to just finding the right people now. Of course, there will still be, quality issues and breakdowns every now and then. That's part of the operations, but we now know it can operate. So now we've decided to, as quick as possible, get it into full mode. We're also looking at quality in Herning, particularly to increase. We're looking at the new commercial agreements that we did at the end of last year to come into effect also on a P&L perspective, because it didn't have any effect in 2022. And of course, we know that the IFRS revenue as a group will increase dramatically just because that Holland is coming online. We have the pitches lying there. Once we produce them, the revenue comes in. So from a top line perspective, that will be quite a dramatic change for 2023. Longer term, the new factories. One of the things we looked into a lot is the cost base. You know, what has happened in the last year is a lot of inflation, steel prices up and down, energy prices up and down, and we're still not at a level that is as it was before. We've also gone out and as I said that before, tried to increase our prices on the front and the back end. And what we can see now, despite a higher cost base, we still believe that each factory that we have in the pipeline will generate the same EBITDA as before. If we are successful with the acoustic panels and other vertical integrations, that is on top. So we're still looking into a very profitable business plan. We're still looking into very profitable new factories. I think that's also important to know. The higher cost base is, of course, also means that the factories themselves will be more expensive to produce than they used to be. It's important to understand the investment itself will be bigger, but the EBITDA and the generation out of that is still very, very attractive.
And what was it you closed the France facility on? I know you probably haven't been able to totally close it, but a ballpark figure compared to the Dutch facility. What have you closed France to?
Yeah, just on the core line, we did 8.5 million in Thiel and 9.5 million in France.
Okay, so it's
on the core line. So, and I think that's pretty good compared to the 8.5 was basically an offer we got half a year before the IPO. So you have to see that in a longer time horizon. I don't expect that the next one can be purchased at 9.5. Sorry, I think it will still go up. We're still behind the inflation curve, but we will of course do everything we can to optimize it over time. And the US, you have to add transport to it as well. So and some adjustments. So it will be higher.
Perfect.
That was a main part of the existing operations. I would now go into the next slides, which are on the transaction. Sorry, I'm just jumping around here. Sorry. The transaction and the offer, just to let anyone know, because we are obviously in a period of time now where people have to decide, do they want to get paid out or do they want to join for the future? So the timeline itself, you can see it here. It hasn't changed as such, but still, let's just go through it. We did the first tranche investment in the 1st of March. We had the EGM approval on the 23rd. Then we're in this period of time now where shareholders, everyone, have to decide what they want to do by the 2nd of May. The way to do this is to go to a website under the voluntary offer, ReMatch / I think it's called voluntary offer. There's an acceptance form. Go in there, download it, and say want to sell or want to stay in. Send it to your bank or institution that you have the shares with, and they will then notify Carnegie on the other side. Following that decision, and we get all those in writing, we will then complete it on the 10th of May with the tranche 1C. In this period of time, we also have the anti-competition authority looking over our shoulders, not because of ReMatch, but because of the new owners have so many other companies and the size of their businesses and ours together that we have to go through that. That will hopefully be completed by the 10th of May. Then following that is the delisting shortly thereafter. And then the next two tranches in Q4 and Q1 of next year to build the next two facilities. And the structure itself, let's just go into a bit of details here. What are we, how does it look afterwards? Well, on top you have the Dane and Nordic Alpha partners with the biggest shareholders. The founders, Dennis and myself, are in there. Minority shareholders, which is everyone else really who wants to participate. We will all together own Project Astro Bidco, for lack of a better name. So hold 100% of ReMatch, and we will then underneath hold all the companies that ReMatch holds today. So there's no difference in that. It's basically just to see your shares will then be in Project Astro Bidco AS. So the consideration is twofold. One, take a cash consideration of 7 kroner per share, or 2, exchange them into ReMatch with shares from ReMatch into Project Astro Bidco shares at 1 share for 1. What happens after that? I've told about it before, but just to recap, it's very important. The economic rights for the minority or the founders or whoever shareholders is the same, which is also, I think, quite unique compared to the other 2 private equity firms. So I think that's very positive. That's something we fought for in the structure of this deal. But it also comes with certain limitations. One is you cannot trade your shares until basically the big guys decide to. And it's the same for me. The Dane Nordic Alpha partners are basically have a horizon where they want to sell within, and once they sell, they can drag us along, or we can tag along. So there are the customary provisions that you can drag and tag, and should there in the meantime be required further capital injections for new factories, for instance, then we all have a right to invest pro rata to protect our own stakes. On the information side, it will be limited compared to now, because now we are a public company. We are doing quarterly reports and updates whenever needed. This will be in private settings, so it will be less information. So the 2 limitations, in my view, for you guys is a trading period, or trading is less feasible. You could also say it was a bit difficult before because of lack of liquidity, but it's less feasible / not possible until the big guys decide to. And the second thing is information will be less afterwards. The good thing is the economic rights are protected and the same as the others.
Perfect. Let's take some questions.
Yes.
There's a question: will Herning be profitable with the changes made to it? You know, you have the new higher prices on stuff, you have the new front-end prices, and you have a more optimized factory. So will it be profitable on a gross margin level again?
Yes. I mean, the short answer is yes. The longer answer is not in 2023, because we had it shut down until yesterday.
Yeah.
So for this year, we will not achieve it, but for next year, we will. Everything we set up now, all the prices, the quality requirements, the throughput rates, etc., is exactly to say this is it. Herning needs to be profitable.
And then there's a question: any news about the US expansion plans? I know you bought a site, but I don't think you have taken the final decision bought a site. You leased a site, but you haven't taken the final decisions to start building, and I guess you still haven't sourced there. Is that correct yet? Some turfs, or maybe I'm incorrect.
We have well, let's put it this way: the site is leased, as you said. We have applied for solid waste permit, air permits, and we have them conditionally approved. So that means that we can. It's almost in our hand now to say let's go. So what are we waiting for? We're actually waiting for Teal to just show the profitability that we all believe in before we push the button. So that's what we agreed with the Dane and Nordic Alpha partner, was to see, we could see how well the Dutch factory was performing during the transaction of the deal, but we wanted to see it on a bigger window, a couple of months, maybe 3 months window, and see how is the factory performing, and can we say tick mark here, because then we start in the US. So that's basically what we're waiting for.
Perfect. And there's a question here: any new contract as the one on the acoustic panels in the making? If I remember correctly, we're not that you really upped the expectations for the revenue on the back end by making this deal. So is there any was that on the Danish factory? I'm not sure. Is there any on the making for, you know, the Dutch factory or the future factory in France? I understand that might be hard until it's built, but any new deals on the back end side?
Yeah. We have, I mean, in Holland, for instance, we are looking at bigger deals on the rubber. In other markets, we're looking on sand and fiber, and we have, I would say, we started extremely well on selling those products. Our main focus in Holland is slightly different than Denmark because we're ramping up the production. That is that we want to see the materials moving out of the factory very quickly and getting a lot of channels in. Now, of course, we've been working on this for more than a year, but we want to see it happen in real life as well. And we've been successful in that. So for us right now, it's not the vertical integration as is in Herning for now. It is more just seeing the materials flow. In terms of the acoustic panels, we see still huge upside in it. We could, as I said before, if we just did a good volume there, you could see the double of the revenue and the double of the profit of each factory. For now, we're not assuming that the Dutch factory this year will sell to AccuPanels. We assume that a certain portion of the Danish factory will, and it will give a big upside. It's still a market where we're producing. We got our customers to buy it. We need to produce. They need to buy, and we are still optimizing the material a bit. So I would say right now I'm slightly behind where I'd like to be in terms of selling to the acoustic panels, but I still believe in it, and the market is huge. So we will get there. We just improved our products over the last 3 months quite a bit, and I think that's a good thing for the future. So I would say for this year, a relatively modest upside on the acoustic panels, but for the future, I see still a huge potential.
And then a little bit, and I don't know whether you can answer that, or you have told me that the strategy is totally unchanged, but looking at the use of more of joint ventures instead of you financing factories, has there been any change by you being, not taking over, but getting new owners in? Would there be some changes in the future, maybe running more joint ventures? The reason why I ask this is, yes, you are allowed to also invest if you need more money to build factories, so you cannot be watered down. But still, do you want to come with that money? So, and I guess you will run less cash dependent if you run more on IPOs, on joint ventures, where you are only partly with. So, any thinking on that point is a change from the plans on where you were public and when you are private?
I think it's fair to say that the acceleration of the rollout, if anything, is going to increase as a part of this, and particularly in the joint ventures. I think it's also recognized by our new shareholders as well as was by the old ones that this is a strategy that is not very capital intensive and that we can do in many jurisdictions. So we will increase focus on that, and we will have what I call more on the SWAT team to analyze the situations and figure out where we're going to build. So yes, there will be more focus on joint ventures for sure.
Perfect. I think that was all the questions. Thank you to Nikolaj for taking us through the progress and what happened in 22 and a little bit more details on the plans for taking the company private. So thank you to you, and thank you to the audience for listening in and asking questions. May everybody have a nice day.
Thank you, Michael.